Second. So our daily analysis for Bitcoin, um, honestly, has not changed too much over the weekend. We're still looking for higher highs, higher lows. We're still looking for continuation of what is currently and still is in the uptrend, right? And the trend has been high, higher low, higher high, and depending on how you interpret this, you can say that this is all one leg upwards, which is what I'm going to say. Or you can say that this is a higher high and this is our higher low in the daily, and this is the higher high and this is still the higher low. And now we're looking for a higher low somewhere higher than here for our daily market structure. And if you make that interpretation, if you see it that way, if that's the analysis that you are going to make, all power to you. No one can really argue with you, right? We always say that price action, market structure, when you're trying to identify that kind of thing, everyone's looking at the exact same information, right? When you really take it down to even simpler than what I already have this, when you remove all the gray boxes, when you remove the moving averages, when you just look at the price action itself, it doesn't lie to you. You're either making higher highs and higher lows, you're either making lower highs and lower lows, or you're doing something in between those and having some sort of consolidation, or maybe just maybe you have no sort of market structure and you're just chopping sideways. And in that case, you can probably identify some sort of range, right? So price action doesn't lie to you, but it's up to you for how you're going to interpret it. So for me, I see this as our high and this is our low, and I see all of this move as one leg upwards. So keep in mind that moving forward, when we dig deeper into these lower time frames, everything lower than that is going to be referencing this daily market structure analysis, right? So now that we got daily market structure out the way, what else are we looking for? Well, we have our daily supply zone at 47K that has done a very nice job of holding us down, right? And we've had this zone marked out probably since this move over here. So late April. So it's been about 4 months now. And we're just now seeing this zone tested. And surprise, surprise, it's acting as resistance, right? The exact same zone that gave us very strong bottoms back in February through April multiple times is now acting as resistance. Oh, wow, what a huge surprise. No one could have ever seen that coming, right? So that's logical. Resistance is resistance. When you start to dig in deeper than that and zoom into your lower time frames, if you are anticipating the breakout from this resistance based off of, say, 4 hour candle closes above it or anything like that, you hate this market right now. This market is out to get you. And we said, you break this zone and you're probably just going to continue the exact same mentality that you've been continuing on with, right? If you can recall that July 24th update where we said, hey, this market has shifted and it's not just a measly little move. This isn't just like a relief bounce. This has potential to be market environment shifting, as in, hey, the market for the past 3 months was very largely bearish. And this tiny little significance on our 4 hour chart may lead to a market environment switch to now we are bullish trending, right? And all of a sudden it's no longer lower highs, lower lows. You come down to this zone, it eventually breaks, and you just continue bleeding. You come down that zone, it eventually breaks, you continue bleeding. Finally, you form some sort of range. Now you're downtrending, right? It's a much different context. So the context now is you come up into a resistance level like this mid range at 35K, you break it, you keep going on to the next. So then you come up into the 200 daily EMA and that 37K supply zone on the 4 hour. You break it, you keep going on to the next. Now you're on to the range highs. You eventually break it, you're on to the next 200 daily SMA. You break it, on to the next 47K. So what do you think happens if we break this one? Probably on to the next, right? So 40 or 52.5K would be the next sort of like target level if we simply just continue this trend of higher highs, higher lows uptrend, break one resistance, reclaim it onto the next, right? So that would be my personal target. And then, of course, taking it a step further than that, above 52.5K. We do have like a 4 hour supply zone here in 55K, and we'll acknowledge it when the time is right. But for the most part, on the daily, the next level to watch out for would be this 59K zone. And then once you break that, then you're really in this like bears are dumb, higher highs, higher lows, price discovery. Do not fade the trend. Do not try to be the top caller. Ride the wave until it dies sort of market environment, right? That peak bull market where everyone is euphoric and things only go up once you crack that 59K level. So lots to talk about before we can be in that sort of a market. So zooming in further, and keep in mind that daily market structure analysis, because that's going to carry over and transition and kind of get used with the lower time frames to form like a whole thesis, right? So my thesis is our 4 hour market structure is currently pending this like consolidation or maybe even a bearish structure. So the way I see this, this was our low. We created a higher high, and then I see this as the higher low. So with this move, we didn't quite crack this high, so technically this is a lower high. You could even call it an equal high. I think that's what I called it in today's market update, and so I wouldn't really hate you for that. So now what I'm looking for is, are we going to hold a higher low and potentially form this sideways consolidation sort of structure and then make our decision from there? Or do we simply just break and now we have lower high, lower low, downtrend, and it looks likely that we'll just continue that bleed into these next major regions, right? And so, not so much this 42K region, that might be a nice little scalp level. Of course, we saw that get very nicely respected multiple times, right? Even back here as well. So 42K, yeah, that would be notable, but more importantly, the one that I'm watching would be this 40K region, 40 to 41K. As I'm sure you guys know, the 40 to 41K region was the macro top. It was those range highs for about 2.5 months. So you would assume that backtesting it as support after seeing it act as macro tops for literally months, you would think that that's the ideal region to come down and backtest in order to hold this higher low on the daily that you're looking for, right? So that is if that 4 hour structure starts to break down. If our consolidation thesis or analysis, whatever you want to call it, goes out the window, it's not viable anymore, and assuming that we're still in a very trendy market, meaning we form an uptrend and that uptrend stays an uptrend for the course of 2 weeks and a 45% move, right? And then we start downtrending, and now that downtrend leads to a negative 12% move over the next course of a week. And then we uptrend again, and then that uptrend starts to carry on for the next 2 weeks. And another 30% from there, right? So that's assuming we're still in this very trendy market where once you swing high very exaggerated with a ton of momentum and lots of volatility. And when you swing down, you're going to do the exact same thing to the downside. So assuming that we're still in this trendy market, if we break down, this is the ideal region to watch. This right here. That daily demand zone now, what theoretically should be demand, along with the 4 hour 200 moving averages. If you know me, you know how much I love these 4 hour 200 moving averages, especially for Bitcoin, right? For the past basically 2 years, they have consistently been macro bottoms and macro tops. So for all of the bull market, they were the consistent daily uptrend gets held along these 4-hour 200s. This is really the only invalidation to that idea where the daily trend didn't, carry on from our 4-hour 200s. It was chop, it was whatever. Eventually, we move on to reclaim them, and once again, they act as a macro bottom. So then we carry on the new daily uptrend that we had formed. Higher high, that was that Elon Musk tweet. Higher low, look at that. Daily uptrend, everything is telling you up. We're in price discovery. We're bullish. We're still holding the exact same thing that we've been trending along for all of this run upwards. So who's to tell you that we're bearish, right? What's the real argument there? Probably not much. Same exact thing here. Same exact thing here. Same exact thing here. Same exact thing here. Oh shit, wait, this time's different. We backtested it as resistance and we expanded away. That truly might be the start of a shift of a macro bearish environment, right? That's the analysis that we were making on April 19th. And then we got this like complacency shoulder. We chop throughout these 4-hour 200s. We're not in this trendy market for 2 weeks. We go sideways. So they start to get invalidated. Momentum and moving averages are very momentum based. So when you're not in a trendy market, very often you'll find that moving averages are not a viable option for technical analysis, right? But eventually we expand away. So now they're sloped. They have momentum behind them. Macro top, macro top, macro top, macro top, and a little bit of resistance, reclaim. And this is why on July 24th, we said, hey, this might be the start of something much, much more bullish, right? And so since then, another 3 weeks or so and 40% higher, here we are. And that analysis worked beautifully, right? So you would think that if we were to come down into this general region where we have daily demand as well as the same exact dynamic level that has been acting as macro bottoms and macro tops for the past 2 years. And that's the ideal region for you to hold on a daily structure, right? Remember that daily structure analysis where we need a higher low somewhere higher than this low. So all that I just told you was, hey, we need a higher low somewhere higher than the next negative 20%. That does not help you. That is not a useful analysis at all whatsoever, right? But once you start to break it down time frame by time frame, you can make sense of this stuff. Ask yourself, what's the ideal region to hold as a higher low? If we lose a specific region, what are the odds that we won't find a higher low? I would assume that if we lost this daily demand zone as well as the 4-hour 200s, if we ever do come down to this region, right? We're playing this game of chess. We're thinking 5 steps ahead. If we ever come down into this region, I would think that if we lost that zone, probably very, very low chance of us finding a higher low. That probably means that the market is once again shifting very heavily to the downside, and now our daily trend is at risk of completely flipping bearish, right? So that's how I'm thinking about this. If we hold this consolidation, well, really, if we hold any sort of uptrend, then that's plan A. We start to break out and up. We keep creating these higher highs. We find higher lows. We reclaim this 47K zone as support again. And we just simply continue doing whatever we've been doing for the past 3 weeks or so, which is crack at this daily resistance, maybe get rejected, and then eventually break, reclaim, and keep it moving, right? And if instead we're going to break down, then we lose this daily structure. We lose the lower time frame supports, which we're going to talk about in a second. And now there's really nothing saying that the uptrend is just going to keep uptrending, right? Now the market's flipping. The lower time frames are starting to bleed and sort of leak down into these higher time frames. And now we're going to test our daily trend and we need a higher low on our daily now, right? So that's the plan B. Again, we're playing this game of chess. Plan C is we consolidate. We have high, low, lower high. If we were going to find a higher low, this is the spot. This is the region to find a higher low. Your hourly 200s, which acted as local tops and local bottoms. And if you read the market updates, if you watch these streams often, then you know I like these hourly 200s for Bitcoin as well. Very, very often we see them used as this intraday sort of like bottom and top indicator. So if we were going to find a higher low, this is the spot to do it at. And just continue this sort of consolidation structure. And a few days from now, everyone that likes these trend lines is going to come out and draw their pretty little triangles. And all that's really saying is, hey, the structure is lower highs and higher lows. And if we break this low, we're probably breaking down. And if we break this high, we're probably breaking out. So that's what I'm watching for. Are we going to roll over and sort of lose our hourly 200s, completely invalidate that consolidation idea? We put in a lower high, now we're going to put in the lower low. We lose the hourly 200s along with putting in the lower low. Now we're breaking down. Now our 4 hour structure is bearish. Now there's nothing really telling us that we won't just keep downtrending into these major regions, right? The zones that we just talked about to come down and test our daily trend. That's how I'm thinking about this. And if we're going to consolidate, great. This is the zone to hold in order to form some sort of consolidation. Find a lower high, come back down, test the hourly 200s again, find a higher low, and just continue going in this like sideways sort of fashion, right? Then the first analysis is we just simply keep doing what we have been doing, which is all of your market structure or whatever, or your weakness on low time frames. It's all stupid. We're going to continue cracking higher highs and find higher lows. We're going to reclaim levels, and we're just going to simply head on to the next one, right? So we have plan A, plan B, plan C. That's what to watch for. That's how I'm going to be looking to play this. So yeah. Last but not least, before we move on, do want to talk about this sort of range that we had drawn earlier, as well as in today's market update. So the reason why I am speculating at this sort of consolidation, which we haven't really done that before. For the most part, it's just been we're going to continue expecting up instead of uh, looking for a major trend shift. We're going to expect up and then expect down, right? Plan C, where we might go sideways for a bit, was never really an option. And the reason being was we were in a very, very trendy market, right? We reclaim something like our 15-minute 200 moving averages, and that little tiny bit of strength leads to a 40% move over the course of the next 2 weeks, basically. We lose something like our 15-minute 200 moving averages, and that little tiny hint of weakness then leads to another negative 10% move over the course of the next week or so. Again, reclaiming that zone leads to another 20% move over the next course of basically 2 weeks or so. It hasn't really been an option for us to go sideways in any sort of like choppy sort of fashion. This is the time where this price action is now drastically different than all of the price action that we've been getting prior to this for the past 3 weeks or so, right? This is now the sideways on our 15-minute. This is allowing for a 4 hour consolidation to potentially form. This exactly right here. So when we're drawing out this range, that's what I'm trying to portray. I'm trying to portray the idea of sideways. This is first high creates range high. So then we come down, we sweep the highs. This is that bearish SFP that we discussed on August 14th. If you don't know what bearish SFP is, we went over it in that market update. We also went over it in previous live streams. But basically, to sum it up, it is a speculative sort of theory that whales manipulate price action by placing basically ghost bids that will never really get filled. They place their buy walls or whatever lower in order to push up price action, and they have their limit sells hidden. Wait, try and clean this up. They have their limit sells hidden where everyone else's stop losses would be. So if you're short on Bitcoin in this region, where are you going to hide your stop loss? Because I know where I would hide mine. I would hide it just above this wick. I would look for the downtrend to continue from there. Whether I'm scalping, whether I'm looking for a high time frame swing short, wherever, there's really not too many places where you can put your stop loss here, unless you want to put it all the way up at 53K, right? No one wants to do that. So where do you hide your stop loss? You hide it just above this wick. So if a big player wants to fill some huge short positions, they can't really do that because of liquidity issues. They need some sort of liquidity in order to fill their bids or their asks. So what they do is they'll place ghost bids and walk the price up, and their limit asks are sitting right here and your stop loss is right here. You are forced to market buy out of your position into their sell walls. Now they're filled, now they're satisfied, they remove these orders, and then the rug gets pulled. That is what an SFP is in crypto. If you're talking about traditionals, it is vastly different, but in crypto, that is the translation of a bearish SFP. And so a bullish SFP would be the exact same thing, but the whales are trying to manipulate price in order to fill long entries. So we got this range high. We got the bearish SFP, which was a sweep of the range highs. Range highs created the range lows. This was first low. We saw mid range, range low deviation. Reclaiming the range leads to opposite side of the range. Range highs, see mid range, and range lows. Here we are breaking down from the range. If we instead reclaim it, we know that deviations tend to lead to mid-range and opposite side of the range, right? That fulfills that sort of consolidation idea. If we continue to reject off of this range low as we're doing right now, we're going to continue lower highs, lower lows. Now we're breaking down below these hourly 200s. Now we're breaking down below that 4-hour structure. Everything starts to make sense and the range has resolved towards the downside, right? So this is where when you really break things down time frame by time frame, one time frame gives you a little bit more insight to the next, and so on and so forth. And when you chain them all together, you should be able to form a nice plan on a higher time frame outlook as to what to look for. Should I be watching for 52K or should I be watching for 40K, right? So hopefully the 30 minutes of rambling that I just went through kind of gives you a better idea of what to watch out for. All right. So, any questions on Bitcoin before we move on? Nope. No questions. Xcode, thank you for helping out our fellow member. We'll move on to ETH USD. I'm not going to spend nearly as much time on ETH USD as I just did on Bitcoin. So I had these price ranges drawn out. Someone asked me my thoughts in on-demand TA. ETH USD still kind of getting rejected from this like 3200 region. So let's go ahead. This tool is called Fixed Range Volume Profile for anyone who doesn't know. And basically all it does is it shows you where was the price action traded. Right? It's basically just VPVR, but you get to decide the price points. And I don't pay for TradingView because I think it's a scam. So this tool is free and I like to use it. Right, so basically all it shows is where was the volume traded, and prior to this piece of price action, this was a black hole. This was a complete void. we made the analysis that said, hey, if we crack above 2800, probably going to teleport up into 3200. There's really not too much here. So that was the analysis. And the reason was we have a supply zone in this area. That remains to be true here today. We're still struggling to get past this little supply zone here. So I would think now that on lower time frames that we've kind of identified this supply zone on a more precise level, right? So these highs here, so these general highs, we have like supply in that zone. So you would think that if we break out and reclaim it, very similar analysis to Bitcoin. Let's go ahead and try and clean this up a bit. Similar analysis to, to Bitcoin. We have that consolidation structure forming, lower high. This is still a high or low technically. There's the potential for consolidation. And consolidation, we look for sideways. We're going to look for lower highs and higher lows. We're going to look for the chop. Everyone's going to come out and draw their nice, pretty little symmetrical triangles or whatever. And that's just basically going to imply that if we break above this high, it's go time. We see another move up into basically what was the top side of that little supply zone at like 3,600. And if we break above that, might just continue the exact same thing, the trend that has been the trend for the past 3 weeks or so, for another 7% into basically the last thing standing before we see new all time highs for ETH. Right, that like last resort, bears need to hold on to this or else they're going to give way to price discovery. And in price discovery, we know that bears are dumb, higher highs, higher lows on literally every single time frame. Don't want to fade that. Kind of just want to draw stupid crazy high fib targets and look for those magic numbers to act as like take profit regions. And in the meantime, you're just going to keep saying, well, the trend is still trending, so I'm just going to keep my position, right? So that's really what to watch out for ETH on a higher time frame. If we do sort of just continue breaking out and up the same way that we've been doing for the past 3 weeks, then probably going to see exact same result, right? Break out, slight rejection, breakout, reclaim, retest, even onto the next one. And then we break that one, slight breakout, retest, whatever, onto the next one. So if we break out between this one, what do you think happens next? I would assume probably another test. Maybe we just continue it from there onto this one. And once we break this one, that's really when you start making the argument. When you start when you want to start making the argument, sorry, uh, that bears are dumb, price discovery, higher highs, higher lows, that sort of stuff. So again, consolidation, know what to look for, uh, have that sort of plan in mind. It's very, very similar price action for ETH USD. We have ample reason to believe that consolidation might be forming here, right? So maybe even you want to take some sort of like scalp long on a position. And really, this is what my uh, setup would look like if I wanted to do so. I don't really have too much eagerness or desire to be trading based off of like consolidation or whatever. I'm not trying to sit here and scalp 4% moves. It's not my thing. If that's what you want to do, then all power to you. This is a valid setup. There's nothing wrong with this trade. It has a very nice thesis behind it. The invalidation is very clear. You break these hourly 200 MAs. You also break your 4-hour structure. You're breaking down at that point. You're bearish trending at that point. So you probably don't want to be in ETH for the short term, right? It would seem very likely that the trend that we have not broken since showing the initial sign of strength on July 21st, and we talked about this too prior to ETH reclaiming its 4-hour 200s on July 24th as well. We talked about the first sign of strength, and that first sign of strength has remained for all of this move upwards. So you would assume that if we lose that, we're probably going to form some sort of downtrend, right? So that's why the price ranges towards the downside. So we'll take it from here, assuming you got stopped out at 3110. Probably going to see another 8% move to the downside. And if we lose that one as well, might even see another 8% from that zone. And of course, we want to tie this in to our higher time frame analysis, which is you need a higher low somewhere. For ETH, this is even more parabolic than Bitcoin, and the market structure really is not too helpful at all whatsoever. But all you know is you need some sort of higher low somewhere. Because truly, if I'm being 100% honest with you, you might hate me, you might laugh at me when I say this, I see this as all one leg up. So we broke our daily market structure here, right? We showed the strength here. This is the environment shift. That was that market update. Hey guys, this has potential to be market environment changing, much bigger time frames. We're talking month-long moves, at least a week or 2 week long moves, right? In drastic, exaggerated sort of fashion, volatile sort of fashion. This was that update based off of the 4 hour. We just simply continued onto today, right? So I see this as all one leg upwards. And that one leg upwards really doesn't, you can't break it down until you zoom in to this 4 hour chart. Your 4 hour chart, the exact same thing that showed you strength here, which led to the continuation for the next 2 weeks after that, 3 weeks after that, probably going to be the ideal region to test on any sort of daily trend retest. So I would assume if we lost that zone, we're probably doomed, right? We're probably in for a much, much stronger downtrend at that point. So now we've broken this down, we've made sense of things, we've kind of tied the analysis together in the form of time frame by time frame, what to look for on each one. And now you can form this plan and this thesis for ETH USD moving forward as well. High time frame, right? So that's my analysis for ETH. Again, very, very similar to Bitcoin. Not much going on here. Potential consolidation forming. And if the consolidation breaks down, then we're going to assume that we're still in a trendy market, right? And we're not just going to chop and just sort of illogically do nothing for the next who knows however long, right? So then ETH BTC does look like it's chopping and doing nothing. I'm gonna skip the daily analysis for ETH BTC. Really, not too much on here. Zoom in further, and we did have like a consolidation, but now this consolidation really is starting to look like chop. So again, if I were a triangle trader, this is what I would be drawing. This is where everyone and their mother comes out and they draw these nice, pretty little trend lines, and they say, hey, we break out and above, probably going to expand to the next zone. If we break down, probably going to expand to the next zone. So that truly is my analysis on ETH BTC at the moment as well. I don't see that as a bad analysis to make at all. The thing is, you want to have confluence and you want to have invalidation, and truly we do have that. We have our hourly 200s, which are really now starting to go sideways more than anything. And we're still sort of holding on to them as support. It's desperately holding on to, but nonetheless, we're still holding on to them, right? And so if we continue breaking down from them, if we start using them as resistance and rejecting off of them, and now we're forming lower highs and lower lows on the hourly, we start breaking below this low, going to seem very likely that ETH BTC starts to continue that move downwards, right? And maybe, who knows? I'm just drawing price ranges. And all this is saying is, hey, if we see this, another negative 2% down into here, right? We break down from here, another negative 2% down into here. And if we break down from here, negative 4% down from there as well, right? And maybe you just get this like negative 10 or 15% move altogether. And then for the upside, Sorry, I drew way too many squiggles. I didn't realize how many I drew. For the upside, very similar to the consolidation idea, but this is why you always want to look for these candle closes. You want to look for the breakout, reclaim, retest, stuff like that. This move was everyone and their mother looking for this pretty little trend line to act as, this beautiful start of a breakout, and we're still in this supply zone. This 4-hour supply zone that we've had marked out for months now on ETH BTC is where we're finding these lower highs at in our consolidation. So you would think that not just breaking out of this, arbitrary trend line or whatever, or this market structure consolidation or whatever that may be, but reclaiming that zone as a whole, on top of doing all that, on top of breaking your consolidation structure bullishly and breaking above that symmetrical triangle trend line, right? On top of all that, then you look for the breakout. Then you look for the expansion. Now you're above the zone. Not just breaking out, we broke this arbitrary trend line and we're still in this horizontal supply region, right? So that's what I'd be looking for on ETH BTC. Don't think I can really break it down much more than that. Finally, dominance, which is a fun one to talk about. So previously, we were saying dominance was scaring us, and it was scaring us for really this was the first sign of strength somewhere in this candle. And we made that analysis and we said, we're going to come up into our failsafe, our sort of like plan B, our last resort, which were these 4-hour 200s, and they're either going to hold up or they're going to give way as well, and we might just continue uptrending for who knows how long. And so we did that. That was the first sign of strength. That first sign of strength then cascaded. We held these 4-hour 200s. They pushed us back down. We had a little bit of more downtrend, another resumption of that partying for another 2 weeks or so. And then the first sign of strength gives way once again. Then the first sign of strength doesn't get like rejected by our plan B, our last resort, that 4-hour 200 downtrend. And we've been using this analysis for Bitcoin dominance for all of this zone. And it's what kept us very bearish on dominance for all of that altcoin bull market, where you basically could have just bought altcoins anywhere in this region and came back a week, 2 weeks, maybe even 6 months later and been in heavy profit. Right? So that's the mentality that kept us bearish for all of that price action. This was, if it's going to show it, and no, it won't. Can't show you the first sign of strength. But this was the first sign of strength giving way. Do our 4-hour 200s hold as they did this time around? The answer was no. So now we have, not only did we show that initial first sign of strength where those hourly 200s gave way, we broke that trend, so we probably come up, we test the next trend on a higher time frame, but we then broke the higher time frame trend as well. Right, the exact same mentality, the exact same sort of momentum, the exact same arguments that we were using to keep us bearish biased for dominance for the past 4 months, really, has now flipped bullishly. And that analysis remained true for all of this price action. That was the analysis, and you really can't ask for much more than that. You start to say, hey, altcoins might be doomed here on June 11th. And that analysis remains true basically up until the last few days. And here we are, August, what's today? I don't even know. Today the 16th? Yeah. Here we are today, August 16th, 2 months later, and the uptrend remained an uptrend. You cannot ask for anything better than that. You managed to make an analysis here and miss out on all of this. You missed out on all of the pain. right? This is crypto. This is a trendy market. This is when trends start to form, they tend to last a week, 2 weeks, maybe a few months, maybe a year long bull market, maybe a year long bear market, right? Trends, crypto, momentum. It's literally what it's known for. So we're going to assume that all of these little tiny moves down were just deviations to the idea that we're still going up, right? And the reasoning for that was we said we would rather be late to the party than to show up and nobody's there. Have you ever done that before? Have you ever showed up somewhere at a public event and nobody was there before? I've never done it, but I can imagine that's a shitty feeling, right? So it's better to show up, and not only are people there, they're already drinking, they're mingling, they're on the dance floor, everybody's partying already, and you just show up and you start partying too. That's it. That's much, much better than to jump in and go to the party just for it to get canceled and rescheduled for a month later. And this too, right? To assume that the party's starting and then jump in and the party really is getting rescheduled. No one's at the party. It's better to show up late rather than early. It's the same mentality for when you're in price discovery. You kind of just want to assume that the trend is going to be the trend, and that the party is just going to continue, and then you'll adjust and you'll leave a little bit late after the party's already ended, right? So now this is the party is starting. That's how I'm looking at this. That's the analysis that we're going to make. And the reasoning for that is because the past few days prior to this piece of price action, we've been saying, hey guys, so let's show you, right? So for this piece of price action, we were saying, hey guys, maybe acknowledge the fact that it might be time to start showing up to the party. It might be time to maybe not get on the dance floor yet, but at least entertain the idea that maybe the party is starting. Maybe you should start getting ready and put those clothes on, right? Instead of being a bum and in your underwear, maybe you should get those clothes ready and at least show up to the party and knock on the door, right? Maybe don't get on the dance floor yet. Maybe at least knock on the door and see if anyone's there. You knocked on the door. Someone answered. This is different. It's much, much different than anything we've gotten the past 2 months. I would assume, since this is crypto, even though we're late to the party started. I mean, really, the party started prior to this, but we really, really started to get very, very bearish on dominance through this region. And the party was downtrend, 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 downtrend. Don't leave the party until you start to get a reason to want to leave the party. Stay at the party, keep dancing, do not leave that dance floor. That analysis held true for the next 3 months after that fact, right? Even if you show up 3 months late to the party, you still get to dance for 3 months. Even if you showed up, this was the macro bottom, right? All the way back in, I don't have a price range, or I don't have a date range, but all the way back in May of sorry, 20th of May, I cannot talk. All right, this was the macro bottom. This was you showing up to the party. The party went up or went on for another 2 months. In this case, the party was uptrend. Altcoins failing to keep up with Bitcoin, right? So even if you show up 3 months late, you still get to dance for another 3 months. Even if you showed up, what in this case it's a month late, you still get to dance for another 2 months. Here, we might show up a few days late. I would assume we still get to dance for at least another week or two. At least. I would think so. I would hope so. It's been working thus far. So, had you applied this mentality the past 2 times, which we did, even if it doesn't work this time around, you shouldn't really care. You shouldn't. You're going to assume that it's going to keep working. And every time it does work, and you do assume that it's going to keep working, and then it does work, and it works for a week, 2 weeks, a month, a few months, a year, who knows how long, that should put you in a position where you can't really go wrong at that point, right? That one win, that one time that you're wrong, or that one win, that one time that you're right, which is more times than not, should put you in a position where you can thrive in a trendy market environment. Don't even need to look at the price action. What's probability that dominance strongly reverses when we have a very strong downtrend? I would think it's not very good. I would think that's a very low probability. Even more so when we're in this sort of price action and we're very, very strongly slanted downside. Our momentum is essentially vertical, right? I would think it's a very low probability. Once you start to go sideways, what's the probability then? I would think it's kind of 50-50, right? You can argue that nothing is ever 50-50, maybe a coin flip and that's it. But I think about it in terms of 50-50 probability. This is sideways consolidation. From this sideways, we either reverse, we continue going sideways, or it's fuel for another leg downwards, right? So to me, it's 50-50. From that 50-50, we get uptrend. So now what's probability of you strongly reversing towards the downside when your momentum is telling you very strongly upside momentum, right? Trendy market towards the upside. What's the probability? I would think it's very slim. Now we started to go sideways. Remember, past few days or so, late last week, mid last week, we started saying, hey guys, this is sideways, right? This is different than what we've been getting. And bar here. I think we might have made the exact same analysis. And we said, don't show up early to a party and assume downtrend or whatever. And then it reversed and we said, haha, exactly why. We don't want to show up early to the party. We want to show up late, right? So we looked at it and we said, hey, sideways. Well, that's different. That's something much, much different than very strongly up. Even though it's not very strongly down, it's still something different. Maybe we should show up to the party. Maybe we should at least put our clothes on. This is the party is starting. This is the exact same thing that would have had you bearish for all of this price action. Now, do not get me wrong. I am not saying that we have to go down and dominance has to go down and it has to trend down for the next 2 months, 3 months, 6 months, whatever. I am not saying that we have to do that. What I am saying is in order for us to do that, this has to happen. That's probabilities. Congratulations. The stupid sentence that I just said that sounded very simple and you just laughed at me and rolled your eyes and like, what the hell is this guy talking about? That's how you break down probabilities. In order for us to downtrend into something like a bull market for altcoins, or maybe just another relief bounce for altcoins, or whatever your narrative is, whatever you're going to rock with, you have to do this. You have to. You can't get this without this. This has potential to be the start of something much bigger. It's not that, hey, this has started, so we have to get something much bigger. That's how I'm thinking about this. We are probable, much, much more probable to see altcoins outperform Bitcoin now rather than the past 2 months. That's the analysis. Hopefully, the past however long I just rambled about dominance kind of sums that up for you. All right, with that said, I do want to at least acknowledge the fact that we've had this zone drawn, this 44-point zone. You can argue it doesn't get very nicely respected or whatever. Take everything with a grain of salt. This is Bitcoin dominance, for crying out loud. It's not something you can trade. But, you know, this resistance level pretty nicely got tapped. We had some resistance levels back here that were very nicely respected. And our 40-point zone, which you can see on the daily, right, this 40-point zone that we marked out all the way back in 2017, 2018, acted as the exact bottom for the downtrend. So when we were in that analysis of just sort of expect downside, bears are dumb, anyone who's calling for chaos, capitulation, whatever, they are stupid, and we just want to keep looking for dominance to keep going down until something different happens, and this was the something different, right? And in the meantime, we just kind of want to look to de-risk our exposure along these regions, each and every single one of them. So this region acted as the exact bottom. Here we are today. We just tested this region. So yes, things are exciting. This has potential to be something much, much bigger on a much higher time frame. We have the potential to start a few weeks to a month to 2 months to 6 months to year-long trends for altcoins outperforming Bitcoin, but also acknowledge the fact that we are at this gray box that Mercury has drawn, right? So if we break down from the gray box, probably going to see altcoins rally even harder. Another negative 8% for dominance into that same exact demand zone that we had drawn prior to this move. Acted as that macro bottom. And then if we lose this demand zone, probably going to see new all-time lows for dominance, which then again opens that gate for massive potential, massive moves on dominance, right, towards the downside. Altcoins very, very heavily outperforming Bitcoin, that sort of thing. So take it level by level, time frame by time frame. There's no rush into anything. The market doesn't go anywhere. Market doesn't sleep. Opportunity is abundant. Um, but know when to adjust, right? Know when to shift your mentality, know when to change your bias, things like that. So that is the conclusion of everything that I feel is relevant in today's market. So if there's anything that you guys want to see, then feel free to go ahead and send it in live stream chat. Right off the bat, Blom wants Luna USDT. And this is a nice little example of the higher highs, higher lows, price discovery, bears are dumb sort of thing. You can really only start arguing that bears are dumb right now, right here, today's candle. That's when I would really start to make that argument. As long as we're not in price discovery, I'm not willing to call bulls or bears dumb. So you can always have some sort of argument, but when you enter price discovery, that means, so let's break it down even further. When you have a daily market structure that's bullish, right? This is your daily market structure. This is an uptrend. So right here, when you create that higher high, that means that your daily market structure is creating higher highs and higher lows. Your 4-hour structure is also bullish. Your hourly structure is also bullish. Your 30-minute structure is also bullish. All the way down into your 1 minute to your 1 second, the exact same moment that you crack above this region, you have a bullish trend across every single time frame, right? So what's the probability that you come in and you say, short here? and then you're right, and then everything reverses, and then so the 1 minute breaks down, the 5 minute breaks down, 15 minute breaks down, hourly breaks down, 4 hour breaks down, 1 day breaks down. And this little tiny moment where you jumped in and you said, top. What's the probability of that happening if literally every single time frame is bullish? It's probably not very likely, right? So that's the mentality. Once you enter price discovery, it is just so much easier to assume that the exact same thing that got you into price discovery, which is this uptrend right here, on every single time frame, whether you're looking at the 1 minute or the daily or whatever, now that you're in price discovery, it is just so much easier to assume that you're just going to keep doing the exact same thing that you've been doing, which is going up into the 1.618, into the 2.618, into the 3.618, further and further and further until eventually something on the chart makes you think that, hey, this time is different. Oh shit, let me get out, right? That's the sort of mentality that you want to roll with. And again, it's not that it has to work any and every single time you use that mentality, but it is when it does work, man, does it work, right? Problem with humans is they can't think logarithmically, they think linearly. So they own Luna at 45 cents, they see it up at $1.35 or whatever, and they think, man, that is crazy. Look at this move. That's insane. That's a 300% move, whatever. And I need to get out. There's absolutely no way that Luna will trade at $2 or anything like that. It was just trading at 45 cents a month ago, right? When it does work, it pays off like a lot. So use that mentality. But the important part is that mentality is only a viable option if you have an invalidation. If you don't have an invalidation, if you don't have a failsafe, if you don't have a plan to exit if things go wrong, you might as well just give your money to the market right now. So for this move, the plan should have very much been the 4 hour 200s. My argument is for all of this up move, how do you know that this time is different than this time if we're still above the 4 hour 200s and that's what we're trending along, right? That's the breakout reclaim that started this price discovery move. That is the back test. We held it as a macro bottom twice, 3 times now. How do you know that this time is different than this time, or this time, or this time, or this time, if we're still above the 4 hour 200s? If that's what we're trending along, if that's the true invalidation, how do you know that this time is different? Because I don't. I mean, I never know, but I can at least have some sort of edge or insight or feeling or instinct or whatever, right? So once those 4 hour 200s break, then I would assume that, oh shit, this time might be different. And it's not instinct, it is we are physically getting something different other than what we've been getting for the past 4 months. So it was true for all of this price action. It remained true even here when we went into a range. We went sideways. We then again used it as a macro bottom, and we continued into even more price discovery. And so the people who failed to think logarithmically and sold out of their Luna down here at 80 cents because they felt like this time would have been a top have now missed out on another 2,200% from their exit, where they tried to be a genius. They tried to be bearish on something that was very heavily insisting that bears are dumb, right? This time's different. This is the time you want to assume that, oh shit, maybe we're done. Negative 30%. Congratulations, you missed out on a negative 30% move just by having some sort of invalidation. You probably feel like a genius at that point, especially if you approached with the mentality that had you a genius for the 4 months prior to that, right? And it wasn't even the time that really started to break down. So then again, we break out, we reclaim the exact same zone that you were using as an invalidation, and we used as a macro top, and we saw a negative 30% move from that region over the course of the next 3 weeks. We reclaim that zone, and you say, oh shit, this time wasn't different. Let me get back in. Right? You were wrong. You take that loss on the chin. And then the exact same mentality here was the exact same mentality here, except this time it was right. Congratulations. You missed out on another negative 75%. Not, oh, you got stopped out, you took a loss, whatever. Who cares? Who cares that you took one loss after reaping all of that reward, missing out on the negative 35%? You take one loss, take it on the chin, suck it up. Everyone loses sometimes. Negative 75%. Now you feel like a genius again. You reclaim. Here we are in price discovery again. So now you have to ask yourself, what's your invalidation? What is the thing that would make you think that this time is different and we might break down, or maybe we come down and test this demand zone again with the 4-hour 200s confluent with it, or maybe, whatever your bearish analysis is. If we go back to a penny, what's your invalidation? Mine, as of this leg upwards, as well as the leg downwards prior to that, as well as the leg upwards prior to that, are the hourly 200 MAs. As long as we're still above the hourly 200 MAs, what's your argument for why this time is different than this time, or this time, or this time, or this time? This time was different, but this time, or this time, or this time. What's your argument here that you wouldn't have been able to tell me here? And then we wouldn't have just simply invalidated your argument, made you look stupid, and then continued up. Because I don't have an argument for you. That is my invalidation. It is, unfortunately, negative 23% from current price. So you probably want to buy closer to your invalidation. Right? Buy close to your invalidation, ride the trend for as long as it lasts, and as long as the trend continues to be the trend, zone out all of the people saying that this was a top. And oh, look at me, I tweeted this on this day and I called the exact top of this thing. They probably did so for here too, and here, and here, and here. So that's my analysis for Luna. We're in price discovery. We just tested the past all-time highs. But by no means am I a buyer right here. And just like we said, we're negative 23% away from our invalidation. And then our invalidation probably tells us, hey, maybe you come down and you come all the way down and retest those 4-hour 200s, which historically get respected. It's another negative 30% or so, right? As well as this daily demand zone. So you don't want to be the person who is speculating that the trend is no longer going to be the trend. You don't want to be the person leaving the party too early at this point or at on this sort of chart. right? Don't leave the party too early. A of USDT. All right. A of USDT. Got a bunch of daily zones marked out here. Really weird price action because it's kind of just going up only for all of this leg upwards. And we just have this daily zone and this daily zone. Let's zoom in and see if we can make more sense of this. All right, so A of USDT 4-hour structure is still bullish, still higher highs, higher lows, very clean uptrend. So I would assume that we're just going to continue that trend, right? We break out above this supply zone here, back tested as support. That's the ideal place for us to hold a higher low. If we lose this zone, probably going to break our 4-hour structure and see a bigger pullback. Right, so maybe our daily pulls back into those 4-hour 200s with this sort of 4-hour demand zone as confluence. And then if that zone is lost, then I would assume you're probably in for an even deeper pullback at that point, right? But as long as we're still above that region, the trend is still the trend and things look good. And I would assume that just like we've been doing, probably just going to break one resistance, whoops, break one resistance, reclaim it, onto the next. Tap that resistance, get rejected, eventually break it, reclaim it, onto the next. And so why wouldn't the trend that resumed here and the trend that resumed here and the trend that resumed here give me an argument for why it wouldn't resume right here, right now? Because I cannot give you an argument as to why it wouldn't, right? Confluence in that idea, hourly 200s, very, very clean. It's holding our 4-hour structure. So these hourly 200s are where we are finding our higher lows for our 4-hour market structure. Meaning, if you lose them, probably going to break your 4-hour structure, and now you have confluence in resistance and in bearish arguments now, where you previously had confluence in support and in bullish arguments, right? So this analysis very quickly gets flipped, and we have that confluence with this 4-hour zone as well. So all of this that I'm telling you is bullish argument. You know, market structure bullish, higher highs, higher lows. Daily is basically only going up, so we know we want to zoom in and try and look for up. And hourly 200s are giving us this 4-hour market structure. We're consistently finding local bottoms along them. All of that gets flipped into bearish arguments if you lose this region, right? So until then, probably just going to keep doing the exact same thing it's been doing. That's probabilities. So really good look for setups here. Trying to long this region, maybe even want to enter now and just uh, don't feel like waiting. That's a 3.2R trade. That's still really solid. And again, your invalidation is nicely justified. Probably don't want to be in this because might see another negative 10% from your stop loss. So not even from entry if you were to enter right here, right now. From your stop loss, another negative 10% probable, right? Doge USDT is a fun one. Bring this to the front here. All right. Doge USDT, higher highs, higher lows on our daily structure. I'm going to say this is probably a 4-hour supply zone because it doesn't really make sense on the daily to me. So I'm going to look for it to why I drew this out on the 4-hour. Sure, it makes sense. But I will say there's probably daily resistance at this 41 cent region, almost 42 cents. So if we were to break this zone, I would kind of just think we continue that trend for another 23% from there. And then you break that daily resistance and you probably just continue the trend for another 23% from there as well. Then you break this region, and that's where there's really no resistance standing in your way at that point, and you probably just see more price discovery. So if we drew out this fixed range volume profile, you can see that each one of these volume nodes where there's a spike is kind of where we have this gray box drawn, right? It's kind of that like justification. It's where people were frequently trading and it created this like pivot level for price action. And you can see that on the actual volume statistics where the volume was traded. Sorry, I did not mean to get rid of that. Then when you look at this volume here, again, we have a little tiny spike there in that general region. So we can say that's supply. We have that marked out. Once you crack above that, what's stopping you? This is a black hole. This is a void. So above that region, you probably see new all-time highs at that point. So again, level by level sort of analysis. We're not there yet. Still a lot of things that need to happen, but just keep in mind for in the future if that is what happens. Right, so Doge USDT, very clean chart actually. 4-hour 200s, very, very nicely respected. Again, this is the issue with humans failing to be able to think logarithmically and only being able to think linearly. Doge traded at basically less than a penny for since existence. We finally break out into price discovery, and everyone's looking for the trend to break. This has to be the top. There's no way Doge can possibly trade at higher than a penny. That's a 10x from where it's been trading for the past 2 or 3 years or whatever, right? Failing to think logarithmically. We hold the 4-hour 200s, we hold the trend, and we continue it. And then again, now 8 cents. They're going to make the exact same argument that they made back here. It gets nulled once again. There is no argument to be made as to why this time would be different than this time or the time prior, right? We hold the trend and we continue that trend for the unforeseeable future. Finally, they're right and they think that they're geniuses. After missing out on Doge from less than a penny all the way up into 75 cents or 72 cents or whatever, they're going to come in and tell you, see, I told you so. Finally, the trend breaks. Now the trend gets flipped. Our 4-hour 200s, the exact same region that we've been using as macro bottoms for the past few months, are now acting as macro tops. This is where you come in and you say, oh shit, this time might be different. And it is. We reject again, macro top. We continue downtrending. Now we're sloped towards the downside. We continue downtrending. We continue downtrending. We continue down. Oh, wait. That's not a downtrend, right? The start of something bullish right here. This time is different than what you've been getting for the past 3 months. As a result of being that trend trader in crypto, in a market that tends to trend very, very hard, another 64%. Up into the next major resistance on our 4-hour chart. So here we are, we're at resistance. Our 4-hour structure is bullish. The trend within the trend, I'm sure it's probably seen on the hourly or maybe the 30-minute or 15-minute. Trend within the trend is still bullish. Everything's bullish. What is your argument? So note that I say this at daily resistance. This is daily resistance. This is us getting rejected from daily resistance. Resistance is resistance and trend is the trend. One of them has to break. Either we break out and reclaim and we see this another 23% move up, likely, or we lose our trend, whatever our trend is. Probably like a 15-minute 200, maybe even a 30-minute. Let's try. Let's just say 30-minute 200s or 1 hour 100s, however you want to think about it. That's our trend at the moment. That's where we're finding these local bottoms, and this time is probably no different. And if it is different, then we'll know. And we're going to assume that the trend has now flipped and that we can short Doge into maybe some horizontal demand at 27 cents or maybe a much deeper pullback all the way down to 22 cents or whatever bearish argument that you're going to make. But you cannot give me a bearish argument here that you could not have given me all throughout this region, other than, hey, we're at this resistance level. So again, I personally am not a buyer on Doge right here, right now. We are at resistance, but the resistance has been breaking and just simply seeing price reclaim it just to head up to the next resistance, just for us to do the exact same thing. So if we do continue breaking out, I would look for setup like this. And at the moment, definitely not viable. But if our 15-minute 200s continue pulling up, maybe we see some sort of move like this, and our invalidation is like this. We can hide our stop loss behind it. I'm sorry, did I say 15-minute? I meant 30-minute. And we can get like a nice 3.5 hour trade off of that. And all we're doing is trading the trend, we're trading the probabilities, we're trading the breakout, right? We're likely to see expansion upwards to some degree. And logically, you would think that that expansion upwards comes up into the next resistance, all the way up here at nearly 42 cents. So trade is a keep in mind this might come into fruition and look to trade this, look to enter later. Maybe later today, maybe later tomorrow, maybe next 2 days from now, maybe never. Maybe we get rejected from the daily and the 30-minute breaks down, and then the hourly breaks down, and then the 4 hour breaks down, and then there's nowhere for us to find a higher low in the daily, and so the daily breaks down, we just enter this bear market, right? Sol USDT, GDM, I'm pretty sure Sol just went into price discovery yesterday. Yeah. So I'm not going to go over the whole, bears are dumb, higher highs, higher lows, price discovery spiel, whatever. Sol had Bull. Sol had a very high time frame consolidation. Lower highs, higher lows on probably something like a 3-day or even a weekly chart. And then we break out from that consolidation, and consolidation or breakouts tend to lead to expansion, and then expansion leads to price discovery. And so now you don't want to fade this. You kind of just want to be the person looking for crazy, stupid high fib targets. And this is where, when you tell people, hey, my target for Doge is 16 cents, they laugh at you. They say, what the hell is wrong with you? You're looking for 16-cent Doge? What do you think? Like what? They're failing to think logarithmically. You want to have the absolute stupidest, if that's even a word, I don't know, and craziest price targets. And you're going to be adamant that they will get hit. Your target is too low. It is. It's too low. Until something tells you your target was too high. Unless you break these hourly 200s, what is telling you that this high is any different than the previous highs? Where you don't, just come back down into the hourly 200s, find a bottom, and continue your price discovery, right? So once that happens, then you look back and you say, all right, you know what? I was wrong. I shouldn't have been so adamant on that crazy, stupid high price target, and I need to adjust. I need to come back in. I need to reassess the probabilities. We might go down even further. So just the simple fact that we might go down further, maybe I want to de-risk my exposure. Maybe I want to capitulate. Maybe, whatever it may be. And in the meantime, you want to target here, target here, target here, target here, 1 fib, 1.618, 2.618, 3.618, 4.236, 6.85, 11.09, whatever. And if you break that fib, you draw a whole new fib extension, you go from there. You keep that same mentality until it stops working. That's my analysis. And that is truly the analysis that had me bullish on every single asset that I owned in January, all the way up into May, when they had the most insane run ups that the human mind can't even imagine. Ask yourself, I remember when Sol was $2, right? I really, really do. Uh, Sam from Alameda, or the owner of FTX, I remember him tweeting something to some influencer or whatever, saying like, "If you don't think Sol's the future or whatever, sell me all your Sol right now for 30% over the fair market value, or shut the fuck up." I remember that tweet. It was not that long ago. I could not anticipate $66 Sol. I, as a human, am flawed. I can't tell you that I would have looked for $66 Sol. But this sort of approach to the market would have had me to where I am in Sol at $66, benefiting from it going up. I never really owned a huge Sol position, unfortunately, but I still made my fair share of wealth through the bull market through other coins, so I really don't care. But this is the exact same mentality that you want to approach with. So GDM, I'm assuming when you asked for that analysis that you're just looking for these crazy, stupid high fib targets to scrape some profit off of, maybe de-risk for if the doomsday does happen. Quick look at EOS. EOS actually was one of the cleaner coins to trade for this leg upwards. And we drew out a couple setups for during these live streams actually, but it really is clean. I think every single one that we drew up ended up playing out. So we said 4 hour. Sorry, um, on. I just completely skipped the daily analysis. I'm very sorry. My brain is everywhere right now. So we had daily supply zone, horizontal resistance. We're currently testing that right now as we speak. So again, I'm going to be a bull on this analysis, but I'm not a bull at $5.63 EOS. $5.63 EOS is expensive, and $6.05 EOS is cheap. And I would think that once you break out from that region, probably see another 42% move up from there. Just like we did, on this way down, not really too much there, kind of a void. And then when you reclaimed it, another void onto the next level, and then you reclaim it again here, and bit of a void onto the next level gets tapped. So gonna assume the exact same thing happens again if we do break out through that region. But for now, it is still resistance. So zoom in further. Now we can do the analysis that I wanted to do. So 4 hour 200s, not the cleanest, but definitely still pretty clean, especially when you're only looking at this price action. Consistent macro tops. So you would think that sideways is something much, much better than very strongly down. So that would make you say, hey, this time might be different. And that's what made us come in and say, hey, have a 4 hour bullish market structure. We have actually, I think we had consolidation on lower time frames even. And within the consolidation, within the 4 hour bullish market structure, we're going to assume that this time is different, and this time being different leads to a breakout up into this resistance as well as the next resistance, which I don't believe we have currently marked out. All right, and we got that beautifully. Whatever line we had drawn, which I'm not sure why it's drawn or why it's not drawn anymore, was the exact top. And I remember looking back at this chart a day later and hating myself for not taking that trade. So then that continued. We broke the resistance. Now we're trending upwards. Now the momentum is shifting very, very strongly bullish. Our market structure is higher highs, higher lows. We even back tested that zone. So again, someone asked for an EOS analysis that day too. I think we came in prior to this move even happening. We said, hey, this is probably a nice little region to get long on EOS, hide your stop loss here, and look for the move up to the next resistance level. So another setup and another potential very solid long trade. So we come up into it again, and it's going to be the exact same argument. We are still uptrending. This is still a bullish price action. We are just simply getting rejected from resistance, and that's logical. Resistance is resistance. Respect it as such. So this is still a higher low. You just need a higher low somewhere higher than here. I'm willing to bet that you're finding higher lows along your hourly 200s or some sort of moving averages. It was your hourly 200s. So I would think that if you're going to hold a higher low, probably want to see these hourly 200s get pulled up a bit. Maybe you pull back down into them. That's going to be the ideal setup moving forward. Again, same exact mentality that would have had you long here. Same exact mentality that would have had you long here would be the exact same mentality that would make you think that it's a good idea to go long here on any sort of pullback into these hourly 200s, assuming that they are pulled up above this market structure invalidation on the 4-hour chart. So then again, you look for your long, you hide your stop loss below your invalidations, you target resistance and resistance. 13.3 our trade. And then even if you never get your pullback, because let's be let's break this down here and how I'm thinking about this as a trader. I know that on my 4-hour chart, I want a higher low on the 4-hour. That's what I'm looking for. That's what the market has been implying that I'm going to get, and that remained true for all of this trend. So if it's gonna remain true, I'm going to find a higher low on the 4-hour somewhere higher than $5.11. That does not mean that it has to be down here at $5.27 and we come down, we test the hourly 200s a day from now and they're pulled up and everything is beautiful and you know everything is just butterflies and dandelions and nothing can ever go wrong, right? That does not mean that. So this is plan A. And then plan B is you already find your higher low. You break out from this resistance. When you do zoom out to your 4-hour, you can clearly see, come back and see in hindsight, this was your higher low. And then you take this sort of trade, but just higher. You just take it here, same exact idea. Look for where to hide your invalidation. You're still targeting the exact same region. And this one's a 7R trade, and this one's a 13.3. So plan A, plan B if plan A never comes into fruition. ADA and DOT. I'm actually going to make these the last two for today's stream just because I am exhausted. Not going to lie to you. All right. ADA, really, I would have told you a very similar analysis to, God, what was it? What was the coin that we looked at? Was it, shoot, was it AVE? No, it was Doge. It was Doge where we said, you break above this region, and then what's really stopping you from heading into price discovery again? That's the same argument that I would have given you above $1.81 ADA. What's really stopping you from heading back into price discovery? Because there's truly not much here. There's not. I mean, I'm not just saying that because I'm speculating there's not much here. There's physically not much here. This is a pivot level. That's where we have that supply zone drawn. This is a nice little pivot level. That's where we have that supply zone drawn. This was mid-range. That's where we have that supply zone drawn. This was a nice little pivot level. It's where we have that supply zone drawn. What's here? Who is willing to step in and be a seller at this region? So the likelihood is you're probably already in price discovery, and you can think about it like that if you were to turn this onto like a line chart. You turn this onto a line chart, then the line at current price would actually probably be higher than the line that was made back here. So that's how you kind of want to think about this. This is already essentially in price discovery, looking for those new all-time highs and actively saying, hey, higher highs, higher lows, bears are dumb, whatever. So now you just want to ride this wave. Now you want to draw your crazy, stupid high fib targets and look for the unimaginable fib targets, fib extensions to take profit at, just for the simple fact that you cannot yield profit if you never sell. That's the analysis. That's the reasoning behind taking profit at all, right? Is just for the simple fact that you will be able to sleep better at night knowing that you have locked in some sort of profit on ADA. And even if the market reverses tomorrow, you know that your hard work did not go to waste and did not, vanish for nothing. And you have profited because you managed to sell. And that's it. That's the reasoning behind it. So you look for these crazy, stupid high fib targets. You simply just take profit on them because you know that you cannot actually profit unless you take profit. So that's how you justify it. Let me scrape some of my position off at 1.618. Let me scrape some of my position off at 2.618. I will continue to anticipate that this gets hit, this gets hit, this gets hit, this gets hit, and the next one gets hit until something tells me that, hey, this time is different. So you want to ask yourself, what's your invalidation? This mentality only works if you have the invalidation, if you have the exit plan. It does not work if you are the person who's buying here and hoping that we only go up. And if we do instead go down, even though unlikely, that you are absolutely fucked. You have now ruined your life and ruined your account and blown it up, and now your wife's gonna hate you, right? So you have to ask yourself, what's your invalidation? So for the majority of the bull market, the invalidation for ADA was the 4-hour 200s. Then we started to get a bit choppy. Right, things started to go sideways. You assume that this time is different. You're slightly right. That's a pretty big move. It's a 30% drawdown. You miss out on that. Great. You reclaim it. Okay, bull market back on maybe. Going to look for range highs again. Going to look for, oh, wait, more price discovery. So now you yield all of that reward. Congrats. And then we start to go choppy. Sideways, you don't know which way to get or which way to expect. You probably want to get out at that point, and then the drawdown. So then the drawdown from these 3 months finally ends. You reclaim these 4-hour 200s and you start trending for a new leg upwards. That one Star Wars movie, A New Hope. You start trending for the new leg upwards, and now your invalidation is probably on a lower time frame. I would say your invalidation at the moment is or are the 30 or sorry, I can't talk. The hourly 200 MAs. So that's what I would really be looking for. This is currently a downtrending structure on your hourly. And if you continue that downtrend and you break down below the 4-hour market structure, which is currently consolidation, then you might just come down into these hourly 200s again. Ideally, they are confluent with this demand zone. And then that's where you're going to look for the trend to just simply continue being the trend. And you're just going to look for price discovery to keep searching for more price discovery. And if instead all of that is lost, you want to take a step back and you want to say, you know what? This time might be different. This might be the time where I need to turn my brain back on and maybe stop anticipating whatever that 1.618 fib is to get hit, right? So dot USDT is going to be my last one. I'm exhausted, guys. I've been staring at charts literally all day. So dot USDT, pretty crazy price action, really. I mean, this leg upwards is just very, very exaggerated, right? And that's a result of this volume spike. And this is a very similar volume spike to what we're seeing on ETH, or what we saw on ETH from like 2100 to 2800. And so if you can recall on those last or on past live streams and past market updates, we were saying, you know, these volume spikes kind of act as like pivot levels. And the reasoning behind that, and actually the whole theory as to why supply and demand works, is because people get comfortable and used to trading at a specific price point. And so every time price comes to that general area, then they're going to get comfortable with selling because that's what they're used to. And then if we come back down into that area, they are comfortable and familiar with that price point. So they might be a buyer this time. That sounds stupid. It sounds like what the hell did I just say? Is that really true? But that is the whole sort of theory behind these gray boxes. Not the theory behind supply and demand, but the theory behind supply and demand, drawing it out on the chart. When you draw a resistance level, a trend line, um, a gray box, whatever. When you draw that sort of stuff, that's the theory. That's basically what you're saying or what you're implying. So what happens is when you have this region that has gotten exaggerated for the course of months, now rather than pivot level, pivot level, pivot level, you're now getting people are comfortable and willing to trade at any of these price points. Any of them at all. It does not matter. Right? Previously, it was very obviously and very cleanly $19 region, right? 1875. Nice little pivot level. We have that sort of drawn out. That is the zone to watch. That's where people are comfortable and familiar with and willing to step in. It's almost identified by like that point of control, right? And then instead, what you start to get is now people are comfortable and willing to step in at any price point. So this is all potential supply. It's all also potential demand, leading to a very odd sort of move like that. And that's exactly what we got for ETH as well. Right? Same exact analysis. So similar to the analysis that we made for ETH, probably just going to continue this uptrend because we know that our lower time frames are trending. You want to target these higher time frame resistance levels. So I'm not really looking at this 200 SMA because I don't really know if it gets respected or not. It just got created back in March, and the few taps that we did get weren't very, very clean. It didn't get like beautifully respected or anything like that. So I have a hard time assuming that this is what we reacted to. I love moving averages. They're basically the foundation of my system. But I'm not going to be the person who comes in and tells you, yeah, we found support on the 200 daily moving averages, and then we flipped them as resistance or whatever. And I can't logically say that and fall asleep at night uh, in good conscience, right? So I'm not looking at this 200 SMA. I'm more so watching this supply zone, which is where we had like a nice little pivot level somewhere in this region. We had that fixed range volume profile drawn. So I'm watching this supply level as daily supply. Can anticipate that as long as the lower time frames maintain their strength, we're going to head up into this daily supply zone. And if we break that daily supply zone, probably head on to the next daily supply, right? $41. And if we break that $41 supply zone, probably going to see price discovery again. So that's the analysis that I would sort of rock with moving forward. We can zoom in, and we're going to in a second here, and justify the price action in between these two levels, right? Or these two levels. But as long as that gets maintained, I'm going to anticipate that this gets tapped. And if this gets reclaimed, I'm going to anticipate that this gets tapped. And if that gets reclaimed, I'm going to anticipate that we're probably going to enter price discovery once again. So again, it's not that, and this is a beautiful example. It's not that every time it happens, right? It happened, it has to work. It's that the times that it does work more than make up for the times that it don't, or the times that it doesn't, or whatever. I'm not an English professor, but you get the point. That is completely way off topic, but it's a very good example because in this chart we did have daily market structure bullish. Every single time frame is confluently bullish, telling you up is the trend from the daily to the 1 minute or whatever. We enter price discovery, and again, that's that bearish SFP, and we fail to continue in the price discovery. The exact same thing that would have had us bullish and had me telling you, hey, bears are dumb, yada yada, whatever. Doesn't always have to work, but the times that it does more than make up for the one time that it doesn't. So that's besides the point, but it's not part of the dot analysis, but it is definitely beneficial to hear for you guys. Again, lower time frames, all still really showing strength. So it's all being maintained. It's higher highs, higher lows, 4-hour chart, bullish market structure, uptrend. You're breaking above this 4-hour supply zone here at 24.50-ish to $24 region. You've back tested it in previous 4-hour candles. So what tells you that this time is any different than this time or this time or this time or this time? Because I don't have an argument as to why this time would be different, right? And then again, hourly 200s, very, very clean. It's also the sort of ideal bounce point to continue that 4-hour market structure. So now you have confluence. If you lose your 4-hour structure, you probably go on to lose your hourly 200s as well. If you lose your hourly 200s, you probably go on to lose your 4-hour structure as well, right? Confluence. Love to see it. So until those hourly 200s break, I can't really give you a strong bearish argument for .USDT because that is the trend and that is maintaining the 4-hour structure, which is also part of my argument. And so once I am wrong, I'm probably going to be very, very wrong. But until then, the same argument that I would think has me right here is the same argument that would have had me right for all of this price action, right? That's the mentality of a trend trader. Congratulations, you just dug into my brain and got to see how I work. It's pretty simple. There's not much in there in that brain. All right. So I'm going to end the stream here. We've gone on for about hour and 45. I think that's pretty good. Streams usually only go on for hour 30, maybe only hour sometimes. I'm more than welcome, or I'm more than willing. Sorry, this is why I need to leave. I'm more than willing to stay for as long as you guys need me, usually. But today I am just very exhausted. All right. So I'm going to end it here. As always, thank you guys so much for coming out. I very much appreciate you coming and watching these streams. I hope that it benefited you in some way, shape, or form. I hope that you learned from it or gained some sort of value or insight. But yeah, love you guys. Thank you so much. Hope you had a great weekend. Hope you have a great rest of your night or day or whatever. And I will see you again on Wednesday. All right. So take care, take it easy, and goodbye.